July is finally over, so this means another portfolio update. 2025 has been a year of a lot of progress and changes in my portfolio. These changes have made my investments reach new heights and personal growth as an investor, acknowledging mistakes, reducing risk, and moving towards the best decisions for my financial journey. In this video, I will be covering all the stocks I bought in July, dividends received, all my holdings, portfolio performance, and much more. All of this in full transparency. As an investor who tracks his journey on YouTube, I believe it is important to show my gains and losses. It is human and is the correct way. Tons of YouTubers don't do this or they show deceiving numbers. There is a moral responsibility in my head to do what is right, and that's why I show my portfolio in full transparency on a monthly basis. In the previous update, I had a goal of reaching 2,000 subscribers, but you guys went above and beyond, making my channel grow a little over 2,100 subscribers. So I want to start by saying thank you for being here and supporting my journey. I want to create a healthy community here on YouTube where investors can express their ideas and talk about their investments. So if you like this type of videos where I show my portfolio monthly in full transparency or do stock analysis here and there, consider subscribing, liking, or hyping this video. It helps the algorithm push this video to the correct investors like you. With no additional fluff, let's dive in. This month, I added 6 high-quality companies to my dividend stock portfolio as part of my long-term plan to reach financial freedom through consistent, disciplined investing. Here's what I bought and why. Microsoft, one of my core tech holdings. Even though the yield is modest, Microsoft is a dividend growth machine. Its cash flow is strong, its balance sheet is pristine, and its reach across AI, cloud, and productivity tools makes it a long-term compounder. I'm happy to keep adding even at current valuations. S&P Global. This is a new addition to my portfolio and one I'm really excited about. S&P Global operates in an oligopoly with Moody's in credit ratings, but also dominates in data and analytics. It's not talked about much in the dividend community, but its double-digit dividend growth and white mode makes it a hidden gem for dividend investors. Texas Instruments is a quiet performer in the semiconductor space. What I love is the capital return strategy. They return almost all of their free cash flow to shareholders through dividends and buybacks. With a solid 3% yield and long dividend track record, this is a textbook dividend growth stock. Visa continues to be one of the cleanest growth stories in the market. Strong margins, global payment infrastructure, and the shift to digital spending all support long-term upside. The yield is small, but I'm here for decades of dividend raises, not current income. Home Depot, a true dividend aristocrat. Even in a tough housing market, Home Depot remains resilient. It's a strong bet on long-term consumer behavior and home improvement. With a growing dividend and a great cash flow, this is a consumer cyclical stock that I haven't bought in a while. So I added a small tranche while it's trading at the downturn side of its cyclicality. And Google, while not traditionally viewed as a dividend stock, Google recently initiated a dividend, which caught my attention. As a long-time cash cow, Google has the financial power to grow that dividend for years to come. I see this as getting in early on a potential dividend growth story, while still benefiting from capital appreciation. I'm staying focused on quality first while slowly building my positions over time. July was a great month of deploying capital into companies I want to hold for the long run. Dividend-paying companies typically distribute dividends quarterly, and depending on when they pay, some months will be heavier than others. For July, this is the case where I make very little income in dividends. Only 4 companies pay me a dividend, and these are Nike, $5.11, JP Morgan Chase, $8.33, Realty Income, $5.90, and Automatic Data Processing, $4.88, for a total amount of $24.22 in dividends for the month of July. $24 might not sound like a lot. That's fine. This $24 came in while I did absolutely nothing. No side hustle, no clocking in, just holding quality companies. That's the core mindset of dividend investing. It's not about the monthly income yet. It's about building a machine that pays you every single month, even on quiet ones. When I see these numbers lined up, I'm reminded how far I've come since the early days. In 2020, I made just a couple of bucks in July, barely enough for a coffee. Now in 2025, I'm earning over $24 in the same month, completely passively. It's not the biggest payout of the year. In fact, July is one of my slower months since most of my higher yielding or larger paying companies don't distribute during this time, but that's okay. Dividend investing is all about consistency and long-term growth, not instant gratification. What I care about is that the income keeps rising year after year. Even this past year, July grew by 9.4%, and that's with a relatively quiet payout calendar. The earlier years saw bigger jumps thanks to new contributions and compounding, and now the growth is stabilizing as the base gets larger. This is the power of the dividend snowball in action. Every small gain adds up, every share bought, every reinvested dividend keeps the machine going. The goal isn't flashy results every month. It's steady, reliable income growth over time, and that's exactly what's happening here. Moving on, I have a portfolio currently sitting at $28,000 with a weighted dividend yield of 2.38%, which translates to a projected annual dividend of $572. As of now, my dividend portfolio is up 6.57% year to date compared to the S&P 500 7.17 return. So yes, I'm slightly trading the index by about 0.6%. Honestly, I'm not disappointed. My strategy isn't about beating the market quarter to quarter. It's about building a portfolio of high quality businesses that pay me a growing dividend, provide steady returns over the long term, and allows me to sleep well at night even during volatility. Being this close to the S&P 500 while collecting dividends along the way tells me I am on the right track. Trailing the S&P by a fraction of a percent in a given year means nothing if I'm building a system that pays me for life. The dividends I'm collecting, the reinvestments I'm making, and the habits I'm building will compound far beyond 2025. I'm not here to win every sprint. I'm here to finish the marathon and cross the finish line with a portfolio that works for me. My portfolio consists of 21 individual holdings, a carefully chosen mix of blue-chip dividend payers and high-quality compounders. Each company in this portfolio plays a specific role in helping me build a steady stream of passive income while also aiming for long-term capital appreciation. I'm not chasing high yield or trying to time the market. I'm building a resilient portfolio that I can trust through all kinds of economic cycles. Going clockwise, we have Apple, Colgate, Realty Income, Procter & Gamble, Waste Management, Kroger, Starbucks, JP Morgan Chase, Home Depot, Johnson & Johnson, Nike, AbbVie, Texas Instrument, Hershey's, Pepsi, Visa, Automatic Data Processing, MasterCard, Google, Microsoft, and S&P Global. I continue to contribute monthly, reinvest dividends, and track my portfolio transparently. The goal? To eventually live off passive income this portfolio generates and to document every step of that journey for those walking a similar path. As part of my dividend journey towards financial freedom through dividend investing, I like to track and share exactly how much each of my holdings is paying me. Transparency is key, not just for my own accountability, but to help others see what this strategy looks like in real time. So far in 2025, I received dividends from all 21 companies in my portfolio. Some paid just a few dollars, others significantly more. But each one plays a role in building consistent, growing passive income. Every one of these dollars represents time and capital invested, reinvested dividends working for me, and progress towards financial freedom. The range of payouts reflects different position sizes, yields, and time held. And I am not chasing high dividends amounts. I'm focused on quality, diversification, and long-term sustainability. Looking at my portfolio's total return so far, I'm seeing a mix of outcomes. Some positions are thriving while others are lagging behind, and that's completely expected. Several of my long-term holdings have delivered strong double and even triple-digit gains, thanks to years of steady growth, reinvested dividends, and holding through market volatility. These winners are the foundation that continues to push my portfolio upward. At the same time, a few positions are still in the red, either due to recent pullbacks, sector-specific headwinds, or just bad timing on my entry point. But I am not sweating it. These are high-quality businesses I still believe in long-term, and I'm using these dips as opportunities to add, not reasons to sell. The majority of my holdings have shown solid positive growth, with many hovering around modest gains that reflect their stability and consistency, rather than rapid spikes. These aligns perfectly with my dividend growth strategy. I'm not chasing quick wins. I'm focused on building a resilient income-producing portfolio for the long haul. As always, I'll continue tracking performance, reinvesting dividends, and sticking to the process through both the highs and the lows. That will be it for July's portfolio update. Let me know in the comments section any questions that you have regarding my portfolio or how much you made in dividends for this month. Don't forget to like, subscribe, or hype. Thanks for watching, and I'll see you in the next one.